How does Sukuk fit in your investment portfolio? Welcome back to my channel, the channel for personal finance and money matters. Remember to subscribe to my channel and turn on the notification bell if you'd like to watch more videos like this. Let's begin. Hi, my name is Luis, your financial educator. A bond is a loan issued by governments or corporations in order to raise money. Bonds are a great low-risk investment that deliver consistent income through interest payments. However, bonds are not Sharia compliant because they involve interest payments, which are prohibited in Islamic law. So, what is the alternative for those who want to invest in Sharia compliant assets? Here's where Sukuk comes in. What is Sukuk? A Sukuk is an Islamic equivalent of a bond. It's a financial certificate that represents ownership of certain assets. When companies or governments aim to raise money for certain projects, they'll issue a Sukuk and use the investment proceedings to buy assets. In return, investors will receive periodic payments and principal investment when the Sukuk matures. Sukuk are considered Sharia compliant because they don't involve interest payments as conventional bonds do. Instead, the payments come from profit sharing or rental of the assets. There are 5 important pieces of information about Sukuk. Sukuk indicates ownership of an asset. The assets that back Sukuk are compliant with Sharia. Sukuk are priced according to the value of the assets backing them. Sukuk can increase in value when the assets increase in value. When you sell Sukuk, you are selling ownership in the assets backing them. Should you include Sukuk in your portfolio? A Sukuk is a low-risk investment that provides stable returns. Investing in it can be a good idea if the following applies to you. Number 1. You want consistent income. A Sukuk provides regular payments, i.e. on a yearly, semi-annually or quarterly basis to its investors. These payments are fixed and predetermined, which makes Sukuk a good investment if you need predictable income on a regular basis. If you invest in a Sukuk fund, the fund manager may distribute these payments to you in the form of monthly, quarterly, semi-annually or annual dividends. Number 2. You need to lower the risk in your portfolio. As you grow older, you may need to lower your risk by increasing the proportion of low-risk investments in your portfolio. That's because older investors have less time to recover if their portfolios experience huge losses. Investing in Sukuk can help you lower the risk in your portfolio, as Sukuk are less volatile than other asset classes like equities. This helps to protect your portfolio when markets are volatile. Number 3. You need to preserve your capital. If you need to cash out your investment soon, say you're expecting to retire in a few years, you should focus on capital preservation. This means preserving your investments and avoiding losses. Investing in Sukuk is a good way to preserve your capital. Unlike equities where prices can go up or down, the value of a Sukuk will not change unless you sell it on the secondary market, i.e. to other investors for a different price. If you wait for the Sukuk to mature, you will receive your principal investment. How much returns can Sukuk deliver? A Sukuk's return can depend on its credit rating. A Sukuk with a lower rating is deemed to be riskier but will offer higher payouts. A Sukuk with higher ratings is less risky but will offer lower payouts. If you invest in a Sukuk unit trust fund, that is, a fund that pools together money from many investors to buy a group of Sukuk, the fund may manage its yield and volatility by buying Sukuk with different ratings and maturities. Based on the data from FundSuperMart, the average past performance for all Sukuk funds are 4% to 6% per annum. However, it is just a past performance. You are recommended to read and understand the fund's prospectus and product highlight sheet for each of the funds before making any investment. For example, an annual return of 5% means that if you invested 100,000 ringgit, you would have received 5,000 ringgit in returns that year. However, it is important to keep in mind that past performance is not necessarily an indicator of future performance. Are Sukuk funds a good investment during economic volatility? Investing in Sukuk is suitable for all market conditions as it helps to manage your portfolio risk and provide diversification. But in times of economic volatility such as the present, having Sukuk in your portfolio can be especially useful. That's because Sukuk pay a fixed rate of return which doesn't increase or decrease based on market conditions. This gives you stable income even when times are uncertain. During uncertain markets, having a portion of low-risk investments like Sukuk can also help minimize the effect of equity losses in your portfolio. How to invest in Sukuk. It used to be hard for regular investors to invest in Sukuk. You'll need at least 250,000 ringgit Malaysia to invest directly to a bank. But these days, you can invest in Sukuk unit trust funds. They are much more accessible than buying Sukuk directly due to a low minimum investment requirements. For example, most of the Sukuk unit trust funds have a minimum initial investment of only 1,000 ringgit or even 100 ringgit, while each subsequent investment requires as little as 100 ringgit. You can check this out on fundsupermart.com or otherwise click the link below to attend my free masterclass. If you are interested in investing, consider how much of your portfolio should be allocated to Sukuk. This involves determining your risk profile and then setting a portfolio allocation. For investors with low to moderate risk profiles, Sukuk can be a great way to manage your risk, diversify your portfolio and provide stable returns, all while investing in a socially responsible manner. That's how Sukuk can fit in your investment portfolio. Like this video if you find it useful. Remember to subscribe to my channel as well. Thanks for watching. See you in the next video.